Hi, this is Tony Kipreos from Axiom Financial Group, and thanks so much for joining us today. In today's video, we're going to discuss a term called risk tolerance. Stay tuned, and again, thanks so much for joining us. A common term in the financial planning and investment advisory world is risk tolerance. But what exactly does risk tolerance mean? Now, we all know the term risk. It means how much risk are you willing to take for how much reward. Risk meaning in the financial planning and investment world, how comfortable are you with the potential of losing money or temporarily losing money? Now, risk tolerance is a word that is thrown around quite often in our industry here. And now that we are in a bear market, which means a period with a prolonged stock market downturn, risk tolerance is something that again is being discussed quite often in the news, in the media, in financial planning magazines, between clients and their advisors, between clients and their family members. And as I was alluding to in the previous video, risk tolerance is something that is most acute when things are going downward in price. When you're making money, everybody wants to take the most risk because they think that taking risk just means higher returns. But in actuality, taking risk is actually the probability of temporarily or permanently losing money. So when it's a bear market like we're in currently right now, it's very important to reassess your risk tolerance and reassess your comfortableness with potentially temporarily losing money. And depending on how you feel there, it's important to maybe readjust your portfolio to make it either riskier or less risky, depending on your personal preference, and then create a portfolio that fits more within the standard deviations and volatility that you actually feel comfortable with. We use a lot of private market alternatives to kind of help people create the optimal risk for reward profile within their portfolio that helps them sleep at night, feel better about their monthly volatility, daily volatility, annual volatility. And we found that a lot of these private market funds can actually help with creating those things. But in general, risk tolerance is something that mostly comes up when the markets are down like we are right now. I think it's very important to kind of have the chance to reassess those things. It's one of the most important factors in somebody's overall financial success and how they feel during their whole financial success route to some sort of success at the end. So I just wanted to kind of bring up those few thoughts about risk tolerance as it's related to portfolio volatility. And that's simply it. So again, thanks so much for joining us today. And please stay tuned for the next video and have a great day. Take care.